Listen up, because this is important. The world of finance is changing. Gone are the days of traders yelling on the floor. Now it's all about algorithms and robots. That's right, trading bots are taking over. These bots are not science fiction, they are real, and they are making money. But what exactly are they, and how do they work? Let's break it down. This isn't some far-off future, this is happening right now. And it's changing the game for everyone, from Wall Street giants to everyday investors. So buckle up, because we're diving into the exciting world of trading bots. In simplest terms, a trading bot is a piece of software. It's programmed to buy and sell assets automatically. Think of it like a tireless stockbroker, working 24/7. These bots follow your instructions. You tell them what to buy, when to sell, and how much to risk. They take emotions out of trading. No more second-guessing or making rash decisions. Trading bots can execute trades much faster than any human. This speed is crucial in today's fast-paced markets. But like anything else, there are pros and cons. Let's explore both. The biggest advantage of trading bots: they're incredibly fast. They react to market changes in milliseconds. This speed is crucial for taking advantage of fleeting opportunities. Bots are also incredibly efficient. They don't need sleep, they don't take breaks, they just keep trading 24/7. This means they can capitalize on opportunities that human traders might miss. But it's not just about speed and efficiency. Bots can also execute complex trading strategies that would be difficult or impossible for humans to manage. This opens up a world of possibilities for savvy investors. Section 4. Inside the mind of a trading bot: algorithms and data. So how do these bots actually work? Let's dive deeper into their fascinating world. They rely on algorithms, which are sets of rules that dictate their actions. These rules are meticulously crafted by developers. These algorithms are designed to identify trading opportunities based on market data. They scan vast amounts of information. This data can include things like price movements, trading volume, and even social media sentiment. Every piece of data is crucial. The bot analyzes this data in real time, looking for patterns and signals. It processes information at lightning speed. When the bot identifies a potential opportunity, it springs into action. It doesn't hesitate. It executes trades based on the predefined rules of its algorithm. Precision is key. This process happens automatically, without any human intervention. The bot operates tirelessly, ensuring efficiency. Section 5. Case study: the Renaissance Technologies Medallion Fund. Now, let's talk about a legendary example of trading bot success: the Medallion Fund, run by the notoriously secretive Renaissance Technologies. This fund is famous for its incredible returns, consistently beating the market year after year, defying the odds. The secret to their success? You guessed it: sophisticated trading algorithms. These algorithms are developed by mathematicians and scientists, not your typical Wall Street traders. They bring a unique perspective and expertise. The Medallion Fund is a prime example of how powerful trading bots can be in the right hands. But remember, this level of success is rare and requires immense expertise, dedication, and continuous innovation. The team at Renaissance Technologies is always pushing the boundaries, ensuring they stay ahead in the game. Their relentless pursuit of excellence has made the Medallion Fund a legend in the world of finance. Section 6. Proceed with caution: risks and challenges in the world of bots. Before you go all in on trading bots, there are some significant risks to consider. First and foremost, bots are only as good as their programming. The quality of the code directly impacts their performance. A poorly coded bot can lose your money just as fast as it can make it. Even a small error in the code can lead to disastrous results. Another major risk is market volatility. The financial markets are inherently unpredictable. Bots can struggle in unpredictable markets, especially during times of high volatility. A sudden crash or surge can throw off their algorithms, leading to significant losses. These unexpected events can be detrimental. It's also important to remember that trading bots are not a get-rich-quick scheme. They require a strategic approach. They require monitoring, adjustment, and constant vigilance. Regular updates and tweaks are necessary to keep them effective. And even then, there's no guarantee of profit. The market's nature means that losses are always a possibility. And even then, there's no guarantee of profit.